The Bitcoin frenzy seems to have reached new heights lately, spurred by a growing user base, price volatility, and the rapidly evolving network of Bitcoin-related companies. According to Michael Saylor, the Bitcoin gold rush era is estimated to last 10 years. Why such an assertive statement? Does that mean there will be no more Bitcoins to buy or mine after 2034? How will this affect your potential to become rich from the next Bitcoin halving event? 410. Stick with me as we dive into details. Michael Saylor is the chairman, co-founder, and former CEO of MicroStrategy, an American company that provides business intelligence, mobile software, and cloud-based services. He is one of the most vocal supporters and prolific buyers of Bitcoin. He currently holds over 200,000 Bitcoins, worth more than $13 billion, and continues to double down. So, if there is an expert in a field whose versatility and success we can leverage, it is none other than Michael Saylor. 2024 to 2034 is a 10-year frame. However, 93.5% of all the Bitcoins were already mined at the beginning of this period, and by November 2034, nearly 99% of all the total Bitcoin will have been issued, and so that is why the halving event is very important. However, you still have until then to maximize and build wealth from this coin before you wake up someday to hear that a coin is $500 million. Historically, halvings have been linked to Bitcoin's price surge in the months following the event, making the supply of new Bitcoins scarcer. The upcoming halving, anticipated in April of this year, will decrease the reward from 6.25 to 3.125 Bitcoin per block. This scheduled event is a crucial aspect of the Bitcoin protocol, structured to regulate the issuance of new Bitcoins and make it a more scarce commodity in the long run. Meanwhile, there has been a surge in institutional interest in Bitcoin, as evidenced by recent net positive flows into Bitcoin spot ETFs in the United States. According to Coinbase analysts, institutional investors are embracing the new ETF reality, with net inflows surpassing $4.2 billion since the start of the year. This level of interest is similar to past flows into gold ETFs, indicating a rising acknowledgement of Bitcoin as a possible digital gold. Bitcoin, like gold, requires intensive mining efforts. But instead of shovels and pans, miners employ powerful computers to solve complex mathematical puzzles that secure the Bitcoin network. And for every puzzle solved, they get Bitcoins as reward. But Bitcoin is far better than gold in so many aspects. In a recent interview, Michael Saylor explained why Bitcoin outperforms conventional assets like stocks, gold, and big tech stocks. He highlighted Bitcoin's secure store of value and long-term wealth preservation capabilities. The big question is, how can you become rich from the next halving event? First of all, you must understand that an halving event in itself does not make anyone rich. Instead, it reduces the profit of the miners. It is the subsequent market volatility that can be to your advantage, ultimately making you rich. Simply invest in Bitcoin now and trade your coin a few months after the halving event. Stick with me a little longer, and you will understand how to go about that. Looking at this screen, we can see that Bitcoin has surged from $43,000 to nearly $70,000. Currently priced at $67,000, it is on the rise again. Experts predict it may reach $130,000, suggesting that a purchase at $67,000 could potentially double your investment in a short period of time. Many experts have predicted that it might attain a value of $150,000 before the end of the year. That's a massive turnaround, far above what you get on your traditional investment portfolio. Simply buy and resell after a few months. Better still, keep it for a few years. However, while price surges have always happened in the past after previous halvings, the circumstances surrounding each halving are different, and demand for Bitcoin can fluctuate wildly. And for those seeking to invest for long terms, there are alternatives to buying the coin directly. 1. You can buy Bitcoin stocks. Investing in crypto-related stocks is another avenue for investors to gain indirect exposure to the Bitcoin and broader cryptocurrency markets. This method involves buying shares in a company that has substantial involvement in Bitcoin, like a Bitcoin mining company. These firms are directly involved in creating new Bitcoins through solving complex mathematical algorithms. Another approach is to consider investing in a Bitcoin-focused fund, such as an exchange-traded fund, ETF. These funds typically track the price of Bitcoin or invest in companies with high exposure to the cryptocurrency industry, providing a convenient way for investors to capitalize on the potential growth of the digital asset ecosystem. You should also know that Bitcoin ETFs can be divided into two main types, futures-based and spot-based. Futures-based ETFs invest in futures contracts rather than holding the cryptocurrency directly. These contracts speculate on Bitcoin's future price, offering investors a way to align with future market expectations. On the other hand, spot-based ETFs track the current market price of Bitcoin by directly holding the cryptocurrency. Investing in these funds allows you to benefit from Bitcoin's price movements. Simply invest, hope Bitcoin's value continues to rise, and cash out whenever you desire, potentially making a profit. According to Bitcoin investment expert Michael Saylor, Bitcoin has the potential to redefine your financial landscape, and it's best to maximize it now before everyone else wakes up to the realization of its usefulness. Did you know that for the first time in human history, you can now take control of your wealth? By investing your money in an asset, you can secure ownership of your $1 million or $100,000 without the interference of governments or banks. You have the power to take charge of your finances with full autonomy. For the first time in human history, Bitcoin provides individuals with complete control and power over their own wealth. This represents a paradigm shift that has been largely misunderstood by many over the years. Are you still in doubt? When it comes to Bitcoin, it's safe to say that Bitcoin is a better investment than gold, equity bonds, and real estate because it's digital. You can trade it 1 million times faster than conventional assets using a computer. How about its availability? Most other assets trade less than 20% of the time. Bitcoin trades 168 hours a week. You can buy as much as possible, even on a weekend when conventional markets are closed. Also, it's global. Do you know that crypto is also the world's fastest leading currency now? It's the most widely recognized and trusted investment asset in the world right now. It's the king of all commodities. There's no issuer, there's no company, there's no country controlling it. Moreover, cryptocurrency is incredibly useful. Thousands of market makers trade it around the clock, alongside millions of companies and billions of people. Whether you're looking to buy a house on a Saturday in Africa or a car on a Sunday morning in Atlanta, this digital currency provides a seamless way to make transactions. It's never too late to hop on the train. Trading with crypto is more beneficial than most people see it. Just like stock and forex trade, Bitcoin is one of the greatest assets available without a second best contender. Of course, buying it at an all-time high price is dire compared to buying it a few years ago. Notwithstanding, it's way better to purchase now than when the price would be double. According to Saylor, it is not too late to get insanely rich.